Mohit Gang joins us this morning to put all this data in perspective. Mohit, good morning. So, of course, we are seeing some knock-on effect from the US markets, but it's not just the US markets, is it? There seems to be something which is really troubling investors this morning. What is the mood that you're picking up on the Lal Street?
Hi Kartik, morning. Always a pleasure to be on your show. So I think, look, the mood gets set with the U.S. markets overnight. Honestly, I think U.S. markets have been on an uncontrollable tearing rush for last 1.5 years odd, and I think it's the accumulation of the overall AI story which is playing out in a lot of quarters now. We hear chatter about AI bubble getting burst, and the tech giants kind of unfolding. So it starts with an Nvidia correcting a little, and that's where the US mood is getting set. Also, along with the data now coming out after US shutdown has opened up. The data is mildly indicating that there might not be a rate cut in December, which is what the market was really hoping for. If that be the case, then obviously there is a case for US equities to cool down a little. Look, again, it's data, and every day there is a new set which comes out, and every day the odds in favor or against of the rate cut keeps changing. But that also defines the global mood. Secondly, I think for reasons unknown, Kospi has been correcting a lot, and I think somewhere the global mood is now setting at some bit of profit taking, some bit of risk aversion in the overall trade. However, having said which, I think the fundamentals in India are looking extremely robust, and day by day, the possibility of a massive rate cut in India increases, right? Whether it will be 25 bips or 50 bips is now a call which has to be taken. But more or less, given the data print, I think it looks likely that India will go in for a 25 bips rate cut, which is what I think the market is sensing. And that's where you are seeing the market slowly inching up. I think today's market is more of a global reaction, but I would still remain a little bullish on Indian markets right now.
All right, let's look at the Nasdaq for just a moment, because you were talking about that AI bubble, and of course there's a lot of theory now about the AI bubble eventually bursting. I'll request my PCR to actually cut to the data that we are seeing right now, because it seems that again there seems to be some sort of a divergence when you talk about this AI story, because a stock like Google has raced up more than 3%, but Nvidia is down about 2%, Apple is down about 2% or so. Meanwhile, even Tesla is up, but Meta is down. So basically, what I'm trying to say is that there doesn't seem to be a real pattern as far as the AI bubble goes. And you're seeing very stock-specific variance when it comes to the US markets, Mohit. Why is that the case?
Look, I think the markets will obviously react to the earnings in US, and we will see incremental earnings coming in from quite a lot of big names this week and so on. But my sense is a lot of anti-AI trade is also getting played on in the market. So if you see all the big AI-driven stocks, be it Nvidia, be it Meta, be it Microsoft, they're taking some bit of a beating. I would still put Google in an anti-AI thing because of the old traditional search engine being their primary focus area, right? So again, these are all speculations. You never know which way the market is heading, but my sense is there is a definitive sign of some cool down in the tech space of US, and I think it was long warranted. So maybe it is coming slowly and gradually.
All right. So tech sort of slowdown in the US. What does this mean for tech stocks here in India? Because tech stocks, as you know, have not had anything close to a fabulous year, and in fact have only been bleeding. No matter how the earnings and what the forecasts are, I think the message is pretty clear that if US tech stocks happen to tumble, then India will not be left far behind, would it?
Look, yes and no both. My sense is because US tech is more a story of innovation, more a story around AI, more a story around chips and other things. Indian tech is more about services, and I don't think so that's slowing down. Look, so from a large extent, there are two cases which can pan out. One is US tech slowing down or correcting because of the anti-AI story. If that pans out, then yes, Indian tech benefits because Indian tech was never in first place rested upon the AI theory. The second part is that if US tech slows down, the spending from all the tech giants reduces, and gradually some portion of income which the Indian tech companies provide as services to the US tech companies might also slow down. So it's a both way impact. You will have to figure out which impacts more. But my sense is, given the way the IT pack has been bleeding for last 1.5 years, we are nearing the value zone on the IT pack in Indian markets. Maybe not now, but in a quarter or so, I think it will start looking very attractive again.
All right. I also want to shift focus now to energy stocks. And energy stocks, again, on the basis of announcements coming in that India is going to up its LPG imports from the US, and all primarily, hinging towards that trade deal to finally go through. What do you make of energy stocks in this new development?
Oh, look, I think I am now bullish on the energy pack per se. I think after the metals and the commodities, perhaps energy pack is something which is showing some signs of breakout overall. And my sense is if the US India trade deal goes through, which in all likelihood should now come through in some form or manner, I think the energy pack will show good signs of a bounce back from here on. Plus, oil being at levels where it has been for a last 1 year odd. I think it is any which ways giving a good boost to the overall energy companies in India. So yes, I think given the way it is shaping out, if the trade deal comes through, my sense is it's a big plus for the energy companies in India.
All right, big plus for energy companies. What about your steel and the metal and the non-energy sort of commodities pack? Because again, that is something which was among the first to be hit when the tariff announcement came through. Now, if tariffs are rolled back, or at least the 25% secondary tariffs are thrown out, then how does a sector like steel, aluminium, etc. get impacted?
Look, very difficult to call out, Kartik. Honestly, I think the metal spec has already run up a lot this year,
Right.
and in spite of the tariff being in play. So my sense is perhaps it could be a case of maybe some amount of profit booking out there, or maybe it's a classic case of buy on rumor and sell on news kind of a thing. So my sense is I would stay away from the pack right now, or maybe just watch and wait it out for some time for the entire story to pan out.
All right. I also want to talk about the defensive stocks, the FMCG stocks. And the FMCG stocks, again, we've seen the GST reduction. We've seen demand also increase, and hopefully Q3 is likely to be better than Q2. But, I mean, these FMCG stocks should largely, one would understand, remain completely unimpacted from what happens on global markets. So why are we seeing this sort of a reaction even on defensive stocks, which, as the name suggests, should be, in fact, go-to stocks when there is volatility globally?
Oh, absolutely. Look, I think for last 1 month odd, we have seen some traces of momentum bounce back in India, and which is where I think the defensive play has taken a little bit of a backseat. I continue to remain absolutely bullish on this pack, given the way the tax ops have been doled out in the country, given the way GST numbers have been, direct tax reductions and then indirect tax reductions by way of streamlining the GST buckets. And I think everything, plus the festive season spending, I think everything will now start flowing on into the market. And with a good monsoon, my sense is overall the pack has been resilient, but it has not given the kind of returns one should be expecting out of the pack because of the constant news flow plus and minus. But my sense is this is one pack to look forward to for next 6 months to a year kind of a scenario.
All right. Now, talk to us, Mohit, something which is always relevant, no matter these ups and downs in markets, and that is about asset allocation. Now, again, we've seen gold prices had inched up again yesterday. I haven't actually checked the MCX number today, but it seems that gold and silver continue to be in the hot territory. Overall, as far as a retail investor goes who's looking at rebalancing his or her portfolio today, what should the ideal mix be? How much should that be invested in Indian equities? How much of that should be large cap equities? And how much of it should be outside of equities in other asset classes like gold?
Oh, Kartik, I think gold and silver has been both a dreamy thing for Indians, but an Achilles heel for the government of India because of the high import numbers which have come in, and the trade deficit has suddenly soared because of this entire thing. But coming back to asset allocation, look, I firmly believe that commodities, incrementally so, warrants at least 10 to 15% allocation in any kind of portfolio, and you cannot do away with it. In spite of the run up, we continue to believe and we continue to remain long term bullish on both the metals. And I think every investor should have that allocation constantly. In their portfolios. Having said which, I think equities have been a dramatic underperformers in Indian equity markets, and I would still continue to believe that you hold your equity allocations again depending on the risk profile, or maybe go a little overweight on equities, on Indian equities for the time being.
Okay.
Not massively so, but yes, I think a little overweight on Indian equities for the time.
Passive investment, is this the right time to go passive, or do you think this is actually the time to go thematic and really go and pick up those interesting stocks and those interesting baskets of stocks through mutual funds?
If you have the wherewithal to research and analyze and be a bottoms up picker, then yes, by all means go and pick up those few good names. But I would continue to believe that yes, the power of index is much larger than anything else. So be a good long-term passive investor and be a good short-term tactical investor is my call. So on tactical side, you can also go on to active funds and select few of those baskets out there. But on a long-term strategic basis, I think a passive allocation in portfolio always warrants merit.
All right, Mohit Gang, thank you so much for all those inputs and for your time to us this morning. Always a pleasure having you on.